Hi everyone. So in this video we'll be discussing about trading fears, how trading fear comes into the way of doing profitable trading, how fear blinds you in not taking losses and reversing your positions. So what is the biological and mechanics which goes behind it? So there is lot of things which are going behind the trading, what our brain decides to do, and I'll be covering those things today. So before that, this was a Twitter poll which I've conducted in March. Which emotions is toughest for you to control when trading? Almost, I think 10,000 people have have taken part in this poll, and 45%. So basically, almost half of the people were saying that fear was, the trading fear was coming into the way of doing a successful trading. So I'll be focusing on the fear. So basically, there are four fears in trading, which is fear of losing money, fear of missing out, fear of being wrong, and fear of leaving money on the table. As per my experience, the two in this fear, the two majority, the priority ones are fear of being wrong, which is there with most of the new traders who come into the market, and fear of losing money. So you need to understand the society which we live in. It gives importance only to winners, and in market when you are going wrong, you don't know how to react, and this is what you need to train. So trading is a new habit. Doing a profitable trading is a habit which needs to be developed. It's not a skill which we are born with, because there are a lot of things which we have to do in markets which are almost opposite to what we do in normal life. Just to give you a simple example, suppose you get stuck somewhere in somewhere in the lift, or you get stuck somewhere, and you're asking for help. So you'll ask for help from your friends, from the people nearby. But in trading, if you get stuck with some positions, you cannot ask for help. You have to cut down to your positions. So there are a lot of examples where stock market is absolutely opposite to what we do in normal life. So we need to make sure that these fears will be there, because our body, our neurons have been built like that. So when fear is there, you have to go in a protective mechanism. But how we can identify it, how we make sure that these fears are not coming in our way of doing profitable trading, is which needs to be learned. So which I'll be discussing in this video. So fear of losing money is, no one likes to lose money, but it is an inescapable part of a trading game. There is no holy grail in trading. When people ask me, if a system is having an accuracy of 80%, 90%, see, accuracy for a profitable trader really doesn't matter. Even if he's working on an accuracy of 20%, he can be a profitable trader. Vis-a-vis, he is able to maintain his proper position size. He is able to maintain his, the trading plan, trading system. There are a lot of things which we have discussed a lot in our website articles. You can visit my website. The link is there on the right hand side. Trading is a game of probability, and every trade has 50% chance of winning. Losing trades frequency of which will be based on the historical probabilities of the trade setup, assuming those probabilities hold true into the future. Now, this is a very important thing. A lot of people backtest their strategy. They're working fine till a certain period of time, then they stop working. It is because the market conditions have changed. The strategies were working very good during trending markets. In choppy markets, they were not doing so good. So, as the condition changes, edge which you're working out diminishes. So you have to make sure that either you change your system or you have a proper, a money management thing, that you don't lose up much money. And loss aversion promotes irrational transactions, irrational actions of cutting trades prematurely and holding on to the losing trades. Now, this is what I'll be discussing in today's video. And second is fear of missing out. If I don't get it now, I'll miss the move. Yes, a lot of people just enter the market before the signal comes, or little bit late from their signals. And then, what happens is you tend to miss out the trade. And when you miss out the trade, you try to jump into the trade, and that leads to big losses. A trader sees to market to begin to move and impulsively takes a trade. Like, market moves very quickly, it is not in your plan, but still you enter. And you guys can correlate with a lot of things which I'm talking about with the trades which you have done. Now, I'll be discussing the difference between a thought process of an amateur trader and a pro trader. So suppose this is a buyable pattern where, the market is just trading within a range. So, the market is getting supports here. So people, the traders who wants to buy support, they will buy here. A professional traders will think from a point that where he will go wrong. So he will keep a stop loss there. But amateur trader, what he will do is he will take the trade with the certainty that they are right, as he thinks he knows what is going to happen next. Now, this is a very powerful statement. Most of the traders which I've interacted with, and you can also think, who are seeing these videos, you can observe your trading. When you're doing trading, you will see that you will enter a trade because you think you are right. You're not believing in the law of probability. You're just thinking because I'm right, the trade should work. Because I backtested it last three times it has worked, the fourth time also it should work. It can work, it cannot work. We don't know. What will be the outcome of a trade? We don't know. When you go by this thought process, this is a thought process of a professional trader who thinks, I don't know what will happen next. That is why they keep a stop loss and they let the market decide. But an amateur trader always go into the attitude of they are right. And this is not a problem because this is how we have been brought up. So when you're growing up, you were always rewarded when you're doing right. So you also think the market will reward me if I do right, but market, even if you do wrong, you exit at minimum loss, you can wait for the next opportunity. And more importantly, they will not put stop because he has convinced himself that he is right, so he's operating himself the fear of being wrong. So if you enter a trade and you have a fear that I might go wrong, you don't know how to react, so then the problem starts. What is the problem? Now, first, let me make you understand fear in trading. What is fear? Fear has an effect on the way we perceive information when we are in a state of mind of fear. We are perceiving information in a threatening way. We are preparing ourselves to an emotional pain. So, when we are in fear, we try to perceive information in a threatening way. So, what it means is basically, and we get into the emotional pain. Emotional pain require interpretations. So basically, suppose I'm not having any positions in the market. So for me, up and down tick really doesn't matter. The market goes up, goes down, it really doesn't matter to me. Even for a professional trader, it really doesn't matter so much. Like they have taken a position, market goes in their favor, they know they have to exit there, market goes against, so they have a stop loss. But for a new trader, every up and down ticks matters because either their position size is so huge or they don't believe in stop loss, right? So if the position goes in your favor, you think you feel joy, you feel elated. And if the position goes against you, you have pain because you think that I'll be losing money, right? Now this interpretation comes from our belief and mental framework. I'll give you a very small example. Suppose suppose you are you live in Delhi and you come to Hyderabad where Telugu is a prominent language, and you talk to some local peoples, and that people, he starts abusing you in his own language, and you don't understand Telugu. So what will happen? Whatever he says, you are interpreting. You cannot interpret what he's saying. So for you, whether he is abusing, he is not abusing, it really doesn't matter. So basically, you don't interpret the information in a sense that someone is hurting me. So there is no emotional pain. Similarly, if I go into the market and it really doesn't matter to me whether I'm making money or whether I'm losing money till I'm having the right position size. So what will happen? The interpretation will not be there for that particular trade. That the market is going down, so I should feel, oh, there is a pain to it. If the market is going against me, I feel joyous. That kind of thing, that kind of thought process will slowly and slow, and it will be there, but it will slow and steady started diminishing. When this thought process started diminishing, what will happen? You will make sure that a single trade will not make or break your account. Trader needs to learn to manage our interpretation so we can manage how we feel in our own state of mind. So if our own state of mind, if I go into the market with a thought process, whether I make money or lose money, I have to follow my process, I have to follow my plan. Then if I'm making money, that is because I was rewarded by the market. If I'm losing money, market says I was wrong on that particular day, I exit with a minimum loss, so that doesn't cause a big emotional pain. Now understand, everybody has a different thermostat of a emotional limit. For someone, losing 10,000 will not bother them so much. For someone, losing 1,000 also bothers to them. So you need to find what is your emotional pain, where emotion gets triggered, and you should take a position which is below that emotional thermostat. Now I'll give you an example. Suppose the market goes down. Suppose you have taken a long trade and the market started going down. So what will happen? So we have a self-protective mechanism which works on an unconscious level, and these mechanisms protect us from the information that we perceive as threatening. So suppose the market is going down. Now the market, you will never focus, the market is breaking the support, you will focus on only the green bars. Okay, whenever the green bars are coming, you think the downfall is over and the market will come in my favor. And whenever the red bars are coming, you think, okay boss, I have to just ignore it because this is causing some loss to me, you know. So this is what we call as tunnel effect or perpetual blindness. You get blinded, you are just focusing on that particular move. Basically things going around us we cannot perceive even though we have ability to perceive it. Now basically I'll give you a very simple example like this. So a trader went long here, on this green bar swing is a bullish engulfing a breakout trade. He keeps a stop loss at the low of this bar. A new trader, what will happen, he thinks that, oh, I'll keep a stop loss here. The market slow and steady started going down, it is taking multiple supports here. Then you wait, I mean it breaks the support, you think, okay, let's wait, the market can hold up. So you think, okay, two doji formed, so market can turn up. Then again it started going down, it going down, then you see, oh, it has gone down so much, okay, let's wait for the next day. And that is where the loss becomes so big. Now now if you can see here, the trade fear of being, so basically you are having that fear of being wrong, so I might go wrong. So that is why you are holding on to your position. So you will, now if you see here, what kind of candles will you be focusing on a green bar, on a red bar? So whenever you see a green bar, you see, okay boss, it is finally over, the trade will go in my direction. You will not see these red bars, you will be blinded by it. You can easily see there is a downtrend in the market, and if you are not in that trade particular point of time, you will say this is a market to short, not to go long. But you went long here and you don't want to accept that I have been wrong, and that is where you continue to hold this losing trade. Now, as we are long, the mind will give more significance to uptick and less to the downtick. As soon as you see uptick, you will have a sigh of relief. So you'll just see whenever the green bars are coming, okay, so these are the green bars I should be focusing on. Mind will give inordinate amount of importance to the tick, which side your trade goes into. Now, this is very important. So if you observe yourself, try to imagine yourself in this situation. You might have been there in a lot of time. So you will give more importance only to the green ticks. You will never give importance to the red tick. But for a professional trader, both of them really doesn't matter. Both of them are equal. So market continue to go down. When the pain of losing more money is higher than the pain of admitting I am wrong, you cut down to your positions. Now, this is the problem. This is what happens with most of the traders. When the pain of losing money, so your probably margin call got triggered, or probably you don't have much money in your account. When that pain crosses the pain of admitting that I am wrong, you will cut down your positions, and mostly you will see the market will make a bottom there and rally back. Now, if you review this trade, if I review this chart, if I show you this chart, you will think, okay, why didn't I go short here? It is breaking 21 EMA, it is breaking the support. I should have gone short, but you were blinded by your fear, and that we call as, tunneling effect or perpetual blindness. This happened with most of the new traders as they work on the trade by the trade mentality. Every trade like putting life and death on that. Now, the suppose the market goes up, you went for a breakout, the market went up. I mean, I can bet most of the new traders, as soon as they get 30-40 points, they will exit the position. They will never write the move, because then they will start focusing on the red candles, because last time they have held on to the trade, then market, went down again. So that emotional pain will again get triggered. So that is called fear of losing money on the table. So what is the solution? To be a consistent trader, you cannot operate with a way. You cannot be fearful in each trade you are putting trading, and trading should be done with a carefree state of mind. Professional traders determine risk. If it works, good, and if it doesn't work, it's all right. Move to the next trade. This is the whole game of trading. Now, there are certain exercises which can be done, which is neuro-linguistic programming, immersion technique, emotional reprogramming, act therapy. I mean, there are a lot of exercises we do. Also, do a course on this. But having said that, I want you guys to realize that this is the major problem with most of the traders. It is not that your strategy is not working, it is that fear which you need to overcome. You need to start thinking in terms of probability. So that's about it I wanted to discuss. Go ahead with the video. If you have any questions, you can put down in the comment section. Thank you very much, and hope this video helps you in making sure that those mistakes which you have been doing, you don't repeat again. Thank you very much.